Good morning, good afternoon, good evening, depending on where you are on the planet. And welcome to the Wednesday, the 13th of April, bull versus bear market for trade day. Steve Miley on the call. I'm going to go for a usual regular run through today. I better get through this calendar. I was going to get some feedback now as the webinar starts. So, we'll take a look at the calendar or the calendars. We'll take a look at both the macro fundamental calendar, the macroeconomic data calendar, and also the micro calendar, the earnings calendar. See what we've got coming up in the next 24 hours, what we've had. We'll take a look also at articles from the major news wires. What are the macroeconomic fundamentals that are driving, geopolitical also driving factors driving markets in here, financial markets right here, right now. And we'll take a look at some charts. Now, I do have a problem with my charts, so I don't know why. I've logged in a couple of times. It tells me I've got live, no live charts in it. I'll log out and log back in again. I thought these would have populated by now, so there might be a slight delay. But I will, when we get to the charts, hopefully the feeds will have dropped in, but I'm not quite sure what's going on there. Let me take a look at the calendar first of all. Now, we've had inflation from the UK this morning, CPI data out of the UK. It was going to be up at record levels anyway. It actually was much higher than, well, significantly higher, not much higher, but significantly higher than forecast. So the month-on-month data was expected at 0.7, came in at 1.1. We had 6.7 was expected on the year-on-year, came in at 7%, so significantly higher in here. Okay, we've got obviously now a key focus now switching. We've had the CPI data. We're key focusing in now for the US. We're going to be looking at the PPI data that we have coming out of the US. Having yesterday had the CPI prints from the US, again higher than expected, the month-on-month in line, but we had the and on the core and the core year-on-year above, but we're actually below in here, so a slight respite. And they did give a slight respite to the markets yesterday. Treasuries tried to rebound. We'll talk about that shortly. Treasuries tried to rebound, stocks tried to rebound, but then had a fairly poor close, but then trying to rebound again in here this morning. So despite the inflation data actually better than expected yesterday, markets reacting, initially the stocks rallying, bond markets tried to rally and stabilized, but now let me just come out of here and just go back in. I'm going to log out and log back in again. Let me just close that down. Let me just come back into the, just want to talk about these as we go. Let me see if that works. It was working earlier on. I was on the platform earlier on. I've come out, come back in again, and now seems to be an issue with my data. All right, I'm going to get on to James and get onto that. I'm not quite sure why that's happening in here at the moment. Probably just my system, because I haven't seen anything else coming through at the moment that there's a problem. So it could probably just a problem from my end, which is kind of annoying, but we'll have to go without the charts in here today, or maybe we'll look at some of the I'll look at charts on another platform, but maybe we'll just go through the fundamentals this morning. So in here, inflationary pressures coming out of Europe. Obviously, that's not good. In here, looking ahead today, PPI data, it's not a big market mover, but given we've got a big focus on inflation, we should be watching it. The month-on-month PPI data in just under an hour, coming in expectations at 1.1%, so we're watching out for that certainly today. We get Bank of Canada in here today. It'd be interesting to see how hawkish potentially the Bank of Canada are going to be in here. So we're looking for interest rate hike there, and maybe a more hawkish tone. Crude oil inventories if you're trading crude in here. The press conference also from the Bank of Canada later today, and then overnight in here we get the Australian employment report, and then I think going into tomorrow, I think we get this RBNZ. Wasn't this morning, right? It was, or was RBNZ overnight last night? Yeah, RBNZ last night. Rate hike in here more than expected from the RBNZ. So 1.25 is expected, delivered at 1.5% in here from the RBNZ. The other factor to consider today, we've already had a lot of the earnings out in here for today. I'm just going to put the filter on in here and just go for the big earnings. So the 3 stars, so the more important earnings, and apply that going into today. So we've got already out in here all the earnings reports from the financials. You can see kind of mix from the big two, so not as exactly great in here. And the forward guidance, I think, from JP Morgan, which is the bigger in here, third of $1 trillion company, and here was not great. Okay, so we had revenue slightly beat. and the actual EPS missed, slightly missed. BlackRock and the other way around on their revenue versus EPS. The revenue missed, the EPS beat. And then First Republic, got a few others in here that have actually outperformed in year than compared to forecasts. So a mixed bag there from earnings. Right, let's take a look at what's been going on. So the US is said to be preparing a military assistance package to Ukraine in here. I mean, in some ways that's kind of positive. In other ways, it's kind of an escalation, right? So markets kind of not really reacting particularly negative to that, but it is certainly an escalation. Also, the world's top independent oil trader, Vitro, I think it is going to stop trading Russian oil by the end of the year. So just pop that out in here. Let me see that article. Yeah, Vitol, will stop trading Russian crude by the end of the year. Inflation is a concern, obviously. US consumer prices, most since 81. We've already discussed that. UK inflation this morning, 7%. Last month, a fresh 3-decade high. Okay. Bullard said the Fed needs to raise rates faster to risk its credibility. Barkin said the best part of the rate is to hike rates to neutrality rapidly. Barner sees the Fed moving especially to neutral policy. So all of these in here, and Bullard and Brain are voting members. Okay. Bank earnings, we've already talked about those, coming out kind of mixed in here. A couple of articles I'll talk through those in a minute, shortly. US equity futures slightly higher to start the day in here, having dipped lower yesterday, having had a decent rebound yesterday at one point, and then dipping back lower. So stocks mix slightly better on stocks in here. Treasuries are steady. So treasuries are stopped going to those higher yield, lower prices, higher yields. So certainly that's deemed as a positive. Yellen in here. Yellen actually speaking today, I think. So Yellen speaks amid concerns about sanction abusing dollar's role. So keep an eye on. So let's just see if that's on here. Actually, Yellen. I'm pretty sure Yellen is speaking today. Might have missed that on the calendar, but probably not going to have an impact on markets. But nevertheless, we need to be watching out for that anyway. I can't see that in there, but I'm pretty sure Yellen is speaking later today. She hasn't spoken already, has she? Yellen on Wednesday. Will got it. So I don't think Yellen's spoken yet. And stagflation risk has investors sinking billions into hedges. So a lot of companies in here trying to hedge against the threat of stagflation. So what we got in here today? Well, European stock indices slightly lower, mixed overall. FTSE's up a 10th. German index, the DAX down 2/3. CAC down 30%. Most of this is because, remember, they closed earlier, and you saw US equity indices had rebounded and were actually up when we got the closes in Europe. And then remember, US closes sold off in the afternoon session going into the close. And then that meant that it wasn't picked up by the European equity indices. So that's why they're down today. They're playing catch up on that sell-off that we saw in the afternoon going into the close in Europe. And you can see in here, we did close down in here for the indices yesterday, having been decently up at one point yesterday. But then this morning in here, up between a half and 1%, half for the Dow and the S&P, over half, nearly 2/3% of the S&P. Nasdaq's getting on for 1% higher in here. So certainly the stabilization of the not going to lower interest rates in here, not lower interest rates, the halt to going to higher yields. Okay, so we're at a slight bounce to lower yields has meant giving a bit of a respite, and I think that could allow for the stock indices to form a base. So this was from yesterday. This is a recap from yesterday. So last night, Wall Street reverses gains, closes low as aggressive Fed actions loom. We know about that. JP Morgan profits misses estimates. Ukraine crisis stalls deal making. UK inflation hits 30-year high. We've already discussed that. Inflation angst keeps European stocks under pressure. Again, referring to the UK data there. And what else do we have in here? So all the stuff that I've already covered really in here. Don't know why that's not loading. Global shares pulls on inflation views as oil rises on Ukraine. So yeah, concerns Ukraine is oil pushed back higher in here again over the last 24-36 hours. Oil up on Ukraine fueled supply concerns. Okay, and then what else do we have in here? Fed policymakers split on post-pandemic inflation landscape. Separate remarks from Fed Governors Laura Brady and Richmond President Thomas Barkin. The post-pandemic outlook showed an emerging rift in the view of leaders who all currently see the need to raise rates aggressively. how the debate shapes up. So even though they're kind of on the same page, they need to be more aggressively. That once that's done, some differing opinion about how the economic outlook looks if they do get inflation under control and once the rate hikes have gone in here. What else we have? Morning bid, peak hawkishness. I think we are at peak hawkishness. What does that mean? Well, are we at a point now where the market has got itself built? It has got built in already. A real aggressive hawkishness from the central banks. Okay, as we said, New Zealand hiked by 50 basis points, biggest hike in over 2 decades. It's tempered its hawkish stance, but given its previous forecast for rates to peak around 3.35. And so, yeah, I think we are getting to a point where we're getting like kind of to peak hawkishness in here. But that will only be, we'll have to wait to see on that one, obviously. Another headline here from Forex, I would say China presidency says no relaxation of COVID-19 measures. So, Shanghai in lockdown at the moment. Okay, real concerns that could put supply chain constraints on various industries, various goods and services. And as Shanghai stays in a lockdown in here, Shanghai reported more than 25,000 cases in its latest update. So, real concern, and then no relaxation of that. So, obviously, that puts negative pressures as well on the global economy and upward pressures potentially on prices. And looking at the Fed tool in here, this is creeping up. Remember, this has been sitting around 81%, basically nailed on now that we're going to get 50 basis point, pretty much nailed on at the next meet. And then looking into the beyond that, we've got 66 plus 23 in here. There's only a 10% chance they only go 25 at the one after that. So we're looking for at least a 50, maybe even more at the 15th of June meeting. I'm pretty annoyed that these are not loading, but there's not much I can do about that. No, it's not even allowing me to log in. So that even happens to us, guys. I know sometimes we get messages from you guys with problems logging in. I'm getting a problem in here myself as well. So let me take a look in here. No, it won't even let me. Okay. Unsocial algorithm. Okay, guys, I can't get it there. Let me just see if I can. I'll just bring up some of my charts from TradingView. So I'm just going to hopefully now, if I can't reshare the page in here, guys, okay, I'm going to kind of switch which screen I'm sharing, because I've got my charts that I use in here on TradingView as well, that I do a lot of my analysis on. And let me see if I can actually just switch the screen that I'm sharing. So I'm just going to pause this at the moment. I'm going to see if I can switch the screen. Okay, so you lose it now. Let me see if I can now switch the screen to this one. No, it's not going to. Oh, there it has. It's worked. You've got it, right? You got that screen? Yes, I believe you do have that screen. I can see it in your feed, so that should be good. Okay, so now let's take a look at this then. So what do we have in here? I'm going to look at the markets you guys really look at in here. So I'm going to kick off with the S&P 500. Now, on this one, there is a slight delay to data. But you can see in here, there's the rebound yesterday. The market set back and rebounded again in here this morning. So, if we can get back up anywhere towards this trend line, there's this little downtrend line that comes from early April from the 5th. If we can get anywhere back near towards that, then that's going to come in around 44.50 in here today. I mean, it's some ways off at the moment, but this is looking, like it's a little base trying to build. If I just zoom in onto 15-minute chart, you can see potential double bottom in here. It's got to clear all the way back up above there, right? And there's the trend line. The market kind of hesitates. I think we can clear above the recent peak there. 44.28.5, the recent overnight peak, then this looks bullish again. If it clears below the recent low down here, back below 4,400, it's looking negative. For me, I think there's a real risk of a little base going in, and that's going to be helped in here by, if I go and look at the treasuries in here, and I'm going to switch it first of all back to like maybe, I don't know, I've got a 4-hour chart in here. So there's that base we were talking about on the treasuries. The market kind of rebounding. In here, it's flirting with this trend line that comes all the way down from March, trying to build a base, okay? And then you kind of see the dip and the rebound in here. And if I zoom in on 15 minutes, you can see now higher, low. If it can clear above this peak in here, you've got a bit of a basing pattern going on treasuries. So treasuries get the base go in, higher prices, treasuries, lower yields, okay? That could be a respite for the stocks, okay? So stock indices. So keeping an eye on that one. Quick nod to gold and oil. So oil in here, punching higher again in here this morning. We've already mentioned the fundamental reasons for that. In here, taking out yesterday's peak at 101.35. Could easily be up to these peaks in here from early April, 105.59. I mean, that is a realistic target. And if we step into the 15-minute chart, you can see there's the rebound from yesterday. Market then consolidating that and breaking higher. I think this is a buy opportunity for gold, for oil, and take a look at gold. Gold staying firm. So now you've got, this is a 15-minute chart. It's a session of higher highs and higher lows. Really strong uptrend in here, about to make new highs. Can only be bullish on this one. Go to like a 4-hour, 6-hour chart in here. No reason we can't go notably higher. Could even be hitting 2,000 in here today on gold. Okay, guys, apologies we couldn't get. I will investigate Tradeovate. Hopefully you guys are having no problems with Tradeovate. I will be back with you with another. Oh, just thank you for James as well for covering us up on the webinar yesterday. I'll be back with another bull versus bear webinar tomorrow on Thursday. Until then, take care, stay safe, and have a great trading day. Bye.